All right. Welcome, ladies and gentlemen. Hope you're all having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead in the chat box, in the comments box, and go ahead and put the number 1 in there. Make this real easy for you. 1 for yes, 2 for no throughout the show. Makes life very simple for getting through here. Just making sure we're good. I know we got a couple of second delay going on there. So I'll wait for that. There we go. Voodoo. Thank you, sir. Appreciate it. All right, afternoon. All right. Thank you for that, everybody. Fantastic. Well, what just happened here? I'm watching Nucor on my screen, and all of a sudden I see these 2 huge 1-minute candles just plop in there. Interesting. Big push. All right, excellent. Well, hope you all having a good day, everyone. I hope it's been a good trading day. Talk to me. How has trading gone so far today? Let me know. And if you're trading and you put a symbol in there that you traded, let me know. Was it stock? Was it options? What are you doing? So at least I get an idea of where you are at. All right, let's see. Oh, a lot of ones came through. Thanks, Jen. I appreciate that. Guys, we got Jen in the room with us here today to help out with any questions you may have. Not a good day. Okay. Mini tie. Green day. There you go, Webcoin. I like that. It was a meh day. All right. Let's see. Got a couple of symbols in there. Tesla with options, SPY calls. Good, Sean. I'm a big SPY fan. I trade it almost every day of the week. I'm up, but pulling back. You know, it's a Friday, right? So where are we at? I mean, let me see. I just switched over. I was checking some other companies out. S&P 500 had a great run. We hit all-time highs today. It looks like we're going to stay. If we hold, we'll stay with closing highs, all-time closing highs today. A close high for the day. You know, but we went up and then we died. And we literally went sideways from about 10:30, and we've done nothing ever since. We've been in that mode, that range. Actually, let me make it a little bigger. On the day chart, we've been in this sideways range ever since, right? From about 10:30 or so, which takes us in right about here. So not surprising. Here's the thing. Moving averages, we've had some flip-flop back and forth on moving averages. The smaller or lower time frame moving average has settled below the 21, the yellow line. So we're in a more of a bearish mode right now with moving averages, but we have been sideways, so they lose some of their value there. But I'm looking now at this bottom right in here. If we break out of this bottom, which you see we just had this little wick in there, but if we break on this bottom, there's a chance we get some pullback in there. Do we get all of it? I don't think so. I don't think we'll see the whole day give back. But we could pull back to that, 4,200 level-ish, 4,210, somewhere around there. And we're up right now 26. Again, it's all a matter of how into the very close of the day. We still have an hour left after this show. We've got 2 hours left now. And the hour left is important to me because I have a few trades to manage out yet as we get going here. But, yeah, I mean, the pullback now is not unplanned. Go back and check Fridays. Go back and look at the last 10, 15, 20 minutes of the day. And you'll see on many days, if you've had a big run up, you're going to have the pullback in there because all the shorts are covering. The ones that are long are trying to get out of their positions, right, and not hold over the weekend. Billy James, good to see someone is trading besides me. Absolutely, my friend. I am. Well, heck, what'd I do? I was on with Spencer right before we got started here. And normally I give him some information about the candidates we're going to be looking at. And I was in doctor's office for 2.5 hours today. As soon as I got home, the first thing I did was bam, jump on my covered calls, my naked puts, my diagonals that I have to manage. So I've got them again already set up for next week. So I've been trading for not as long as I'd like today, but I will for the last hour. That's for sure. Had SPY calls from last week. Good. Well, AV, you're doing well if you had them from last week. Good SPY calls, Bruce. Nice. AV guy said the SPY has been a ride this week. It is rode and jumped, and now today is holding. It is nice. Yeah, it's good to see it. If we back this up a little bit, it's 5-minute chart. We back it up a little bit. You can see we've had some nice move, but not without this drop that took place here on Tuesday. Right, that was a big hit that we took on Tuesday. So we'll see. You've got to look at it like this. All right, if we go back to S&P 500, you got to look at it like this. Let me take this down. And let's get zoomed in on that a little bit. All right, I don't want that. Okay. So we keep pressing up into the top of our Fibonacci level, which is that 4191. We've got a 4181 level on the S&P 500. If you're not familiar with this, snap that line on your chart. It is a major Fibonacci number. And that's where we topped out right there, right? We have hit it over and over and over and over and over again for weeks, almost 2 full weeks we were there. Yesterday was a good break, and today was a great continuation. You can see where the previous all-time high was right there. We're well above it right now, but we pushed up here. You ready for this? Where's the high of the day? Today we are at, on the S&P, 4238.04. Here we have 4237.25 is our fib number. So what are we talking about? 75 cents difference? That's how close we hit our next fib level in it. Fibonacci levels are critical, guys. You got to get some focus on them if you're not. Let's see. I find that the RSI for the SPY on the 5-minute chart is a good indicator for near-term terms. Yeah, Webcoin, I'm a big fan of RSI. You know, I think it's a great indicator. For the way that I trade, I use CCI versus an RSI, but it's more of a tertiary indicator for me. It's not even a secondary. It's more tertiary for me. The way I trade off of fibs and moving averages seems to work extremely well for me. But there's so many technical indicators to be used, right? I'm watching Tesla for Elon on Saturday Night Live, things, and GME with the court hearing. Yeah, I saw the new SEC chairman today. Good politician. I will say that. Had all the right political answers today for the questions they were throwing at him about what he was going to do with GameStop and payment for order flow. And I don't know, today he made a statement that not every broker accepts payment for order flow. That wasn't the case when I first got started trading. Every broker got paid for order flow. It was just part of what you did. It's just, all right, the flow is coming to us. We're going to pay you for it. He's talking about potentially taking that away. He said that just going out there and saying and telling people, well, they get paid for order flow isn't enough. There's concern of, is the order getting routed differently? And now because they're not routing just to exchanges, they're routing to the not brokers, but wholesalers. There's definitely question, according to the SEC, of are we actually getting best bid, best ask? In other words, the required best price when you hit enter. That is definitely an issue. And he was talking on some of the apps. He didn't say it, but he talked about the GameStop guys, the apps, and the Robinhoods of the world and so forth. I don't know who else. I mean, I trade with TradeStation. I trade with TOS. I mean, you're going direct right from there. I don't think they're wholesaling. Don't think. But I do compare prices between the two, and I'm usually pretty good on my numbers. So I don't really see a lot of issue with it. But I'm looking at Elon Musk to see what happens with Dogecoin on Saturday Night Live, if he talks about it or not. They said it's going to explode if he does. Let's see. Here, stocks generally feel heavy, but timing in and out is very important. Yeah, Robert, without a doubt. I mean, getting your timing right is critical. I mean, I have a phrase that I use, guys. And if you come back to the show long enough, you will hear it again and again and again and again. And it is a clear and concise entry. You've got to have a concise entry where you're getting in at the right place. If we were to look right now, let me go ahead and I'm going to scale that up and just move it down and make it a little bit easier to see. So if you look here, I've got this horizontal blue line where my mouse is at 4191. I've got the pink line, which is the 8 moving average. That is a concise component of the entry. In other words, there's a moving average, a fib line sitting right on top of each other, a confluence. If I can get that, it's the strongest level that I can get my hands on, right? That's number one. Now, the stock, if it comes back and tests off of that level, that then gives me the concise entry. The clear component is the path between where we are and resistance. Is there a clear path, or are the resistance levels up there? Are there these 100-point lines? That's this little dash line at 42 and 4,300. Are they in my way? If that's the case, and you really have to measure, is this a trade I want to take or not? So the in and out component is critical, but you've got to get very, very, very focused on finding the right entry, and then the exit should be a clear path to it where you're not being restricted or having other stuff that you may bump your head. Because how many times I've seen it hundreds, if not more, where a stock has moved up and hit some resistance level that really wasn't my key resistance, but it was a moving average, a Bollinger Band, something hit it and came crashing back down that I could not even manage the trade that I was in, and got my head handed to me with it. So I agree 1,000,000%. All right. So guys, the strategy I want to talk about today, for some of you, I'm going to blow you away. For some of you, you may sit back and go, wow, that looks pretty cool. I don't understand it, but it looks pretty cool. But it's a practice trade component of what you need to be looking at with this. You should not be going out when I teach this now and say, oh, I'm just going to jump in with real money. That's a mistake. You want to practice this first. And what we're going to do today, or what we're going to talk about today, is a strategy, is what's called an iron condor. Now, I already went over and talked in the past in one of the other shows, so you can go back and watch that. But we went over and talked about credit spreads, right? About what a credit spread is and how we trade credit spreads. Some of you don't like credit spreads. Some of you do like credit spreads. There won't be a strategy that I ever teach that everybody says I like it. It just won't happen. It's like saying everybody likes the cell phone provider that I use, which you don't, I'm sure, as I may not like yours, right? But the different strategies are different tools in your tool belt, right? I just got done doing a training for some of my students last week on in one of our classes that I teach. And the training was on, I compared it to my kids growing up and having a jar system where we saved money and how they saved money in there. And the reason I brought that into it was you should trade for purpose, right? And I talked to somebody on the phone, and he may be listening in right now, last week, actually right before I got ready to teach one of my classes. He and I had gotten on the phone, and we talked for a little bit about wanting to buy a car. And I had made a comment that, you know, trade with purpose, meaning don't go and buy the car outright with cash. Go and get the best deal you can on the interest rate for it. Put down what you can afford to put down without crushing yourself, and go ahead and trade an account with that rest of that money in there and use that money to go ahead and pay for the car. So that's what I do every single month with covered calls, naked puts, diagonal spreads to pay for my truck. It's done that way. I put what I had to put down on it, the minimum the company would take. I did a 5-year, 0% interest-free financing. So 60 months, my payment's a couple $100 a month, and I'm able to generate it from what I would have paid for the car. I'm able to pay that off. Now, I'm not generating or incurring any interest because I did get 0 interest on the loan. But if you can't, then that's okay. Go ahead then and set an account up instead of paying for the vehicle. Set an account up and trade the account. Well, one of the trades that I love to do is a trade called an iron condor. Right? And an iron condor is basically 2 different credit spreads done at the same time. Right? And you can do this on any optionable stock. I really want to focus on this today on one very particular vehicle. Actually, what I'm going to do is I'm going to remove you picking the candidate out. I'm taking that completely away. You don't need to worry about that anymore. I am giving you the only candidate you should be focused doing this on if you've never done it before. Do it for a couple of months on paper and see how it works. Right? So basically, if we go back and look, if we talk, you know, iron condor is the basis, right? But we need to do credit spreads first. Right? Why does it not look right? BADS. Okay. Credit spreads, right? And there are 2 different types: bull put and bear call. A bull put spread and a bear call spread. So basically, if you had let's do this here. If your position was trading at $100, I'm just making numbers up right now, right? And that was the stock. We come back up here, and we have 2 different things we're going to do. We're going to sell to open, and again, I'm just making this up right now. Let's see, the 105 call. We're going to sell to open. And when I say making it up, I'm making up the strike prices. STO is sell to open, right? And then maybe the 107, let's call it, call, we're going to buy to open. So in essence, what I just did there is I said that we are selling the 107 call. So will somebody call the stock away from me at 100? I'm sorry. We're selling the 105. Will somebody take the stock away at 105 while it's trading at 100? No. If they do, you tell them, thank you. Please pay me $5 more than it's worth. I greatly appreciate it. Can I have your number? Maybe we can do this again next week. right? No one's going to do that normally, right? Now, on the put side, let's say that we've got the $95 put, and that is our sell to open. And then we have, let's call it the 93, just to be equal with our numbers, just so you can see here. I'm not trying to do math. This is our buy to open, right? This, in essence, what we just did here, this is an iron condor. This structure right here is an iron condor. And the position that I want to do the iron condor on I want to do it on the RUT. Want it on the index. I do not do these on the ETFs. I only do them on the index itself, right? If you try to take my rules and extrapolate them back to the ETF, you can, but you will not get the same results in the ETF as being a managed position versus the index itself. Remember, the ETF and the index are never exact. The index is always slightly different, as is the futures are always slightly different, okay? So we're going to do this on the RUT, the RUT. Let's see. Let's make sure I didn't miss anything. Credit spreads are awesome. There you go, Miles. I love them. All right. Yes, Alan. So they have, so it's a yes or no to your question, Alan. A European style expiration. Yes, but there are some months or weeklies that are written that do wind up having an American style. American style cannot be exercised. An American style can be exercised anytime between now and expiration. A European style cannot be exercised until expiration. So although you can't be exercised, it doesn't mean you're safe. It's the trade can still go against you in that instance, right? So when we look at it, do you ever do iron condos on SPYs or Qs? Brad, I do, but I'm doing iron condors on this longer term. So here's the, how about this? Here's why the RUT, all right? What have I told you on this trade? There is about an 8% chance of being wrong. I don't know. What do you guys think of an 8% chance? That means 92% of the time you're right in this trade. I'll take a 1 for yes if you like it. If you think an 8% rate of return is good, let me know. Share the love. 8% rate of return. 8% chance of being wrong. There you go. Okay. Couple of you. I know. Just a few second delay for this to come across. I get it. All right. I get it. So, and the reason for that is the way that we choose our delta, our strike prices, is going to be predicated based on that. So I'm going to switch over to the RUT right now. $ RUT on TradeStation is the ticker symbol. All right. Take a second, open up. You can see there are a ton of options on here. All right. First thing I need to do is I'm going to change mine over to all strike prices. I can't get away with just 20. It doesn't work. And I really don't want to go look at this individual grid, the option chain, and find the symbols, or the strike prices rather. I want to go ahead and change this from single to vertical. And I know you can do this on TOS as well. And by the way, I am using purposely the June 21st because I'm looking for about 45 days from now is what I'm looking for. All right. And this is a trade that you could, and again, as a paper trade, I suggested put it on today. Now, normally when I'm trading an option, if I'm buying a call or buying a put, normally I'm looking to trade. If it's a day trade, it's the shortest term possible, meaning this week. If it's a swing trade, I'm looking for at least 30 days, as much as 60 days, if it's a swing trade. Great. This falls in that parameter. But then I go and look at delta, and I want delta of at least 65. On this, I don't care about delta. Actually, because we combined them together and did a vertical, so we're pulling two strikes at the same time. If you look in the strike price in the middle, it shows 630 by 40, 640 by 50, and so forth. Because we combine them together, delta is off. I'm not a math guy. I have a friend of mine that is. He was a math teacher before he became learned how to trade. And he said the delta of a delta doesn't work, so it cannot come up as an accurate number. In other words, the delta on these deep in the money options is coming up as 0. Right? Oh, now we're getting a 0.1. Great. 0.2, 0.3, now back to 0.1, then back to 0. We're all over the place on the deltas here. Right? So the delta doesn't quite work. Right? So we're not looking at delta. Instead, here's what I want you to do. I want you to find the mid column, and I'm just going to turn on my recording software only so I can grab a drawing tool. So just wait a second for that to get up there. Get that out of the way. I'll start the recording. So just bear with me for a couple of seconds. I just wish that we had, and I use the same software we do here in Benzinga for our recordings, but we don't have any drawing tools that I've been able to find. 3, 2, 1. Okay, now I can hit pause. I don't want to record it. All right, perfect. So I want you to look not at the delta column. Let's get a pen. Not at delta. Here we go. Not here, but I want you to look at the mid price. You know what? Let me change the color of that a little bit. Let's change that to white. I want you looking at the mid price, right? That's the price that is going to be the guide for us to help us understand. Now, we're going to start off on the put side only because we're already at the higher end here is at the lower prices, right? We're very much out of the money on the options. So I want you to scroll down on the mid price. You need to write this down, okay? You want your mid price to be 50 cents, right? I have 3 of them right now that are giving me mid price of 50. 3. Let's change it. That didn't work well. Let's use yellow, all right? The white's going to disappear. So I have 50, 50, 50 right in here. Right? So what do I want to do? Which one do I want? Rob, they're all 50. Which one do we want? I want the one that's furthest away from the stock price. So you've got a 1900 and a 1910. You've got a 1910 and 1920 and a 1920 and 1930. I want the one that goes furthest down, the furthest away. Stock price is here. What's the lowest one we can get? And that's the 1900, 1910. This is the one that I want to trade right there. The 1900, 1910. Right? So what we would do is this. You want to make sure now prices are changing, right? And you're going to have that happening. It froze because I was drawing on the screen. But 1900, 1910, notice there's a $10 increment between there. That is important. On some of the strikes, depending on the months and or the weeks, you may have $5 increments. On some of them, you go further out onto the calls, you may have $50 increments. Right? 3350 by 3400. No. So the 2 things that you need to have here is on the increments, you want $10. What does that mean? It means 1900, 1910. That's a $10 increment. Right? And then your mid price, and that's mid prices on TradeStation. Guys, what is it called? Thank you, Voodoo. I appreciate it. That's the question I was going to ask. What is it called in TOS? I didn't remember. It's called mark. That's your mark. All right. Your mid price needs to be 50 cents. That's the credit we're looking to pick up here on this trade, on this transaction. All right. So when we look on our puts, we want to find that mid price of 50 cents. We've got one right now, 1910 by 1920. Oh, there we go. So it's kind of flopping around. We're going to use the 1900, 1910. So we're going to go over to, on TradeStation, the way to trade this is you put your mouse on the bid price and you click sell. Right? You left click on it and it'll go to sell. I'm going to take this off from 5 contracts and just change it over to 1. Now, it shows a credit right now at the mid price of 45 cents. I'm just going to kick it up to 50 cents in there. All right? And basically what we're doing here is the stock right now is trading at $2,266.54. That's the index price right now. We're saying that if we're anticipating the stock will not get down to 1900, right? And as long as it stays above between 1910, as long as it stays above 1910, we're okay. If it drops down, we've got a $10 max risk in this trade. And we only have about 8% chance of being wrong on the trade. And I've said it 3 or 4 times, and I am sure that you guys have asked the question of why. Where do you get the 8% chance of being right in this transaction? So let me share that with you. If I change this off of vertical to single, right? And now my 2 strike prices are loaded up in there, all right? And if you slide over to the right, you will see the delta column. You have a delta of 6. That 6 is a probability calculator, and it tells us that there is a 6% chance. That's it. 6% chance that this option can expire and have intrinsic value, cash value. But understand, 6% chance tells you that sooner or later it's going to happen. Because some of you looked at this and said, wait a second, if I have only an 8% chance of being right, and I'm wrong, and I'm right 92% of the chance, I'm going to kill it. I'm going to crush it if I am only wrong 8% of the time. But I can tell you right now that this is what you're looking for. For the year, on average, you're looking at about a 42% rate of return. You have 1 or 2 trades go against you. If it's only 1, it'll be a little bit higher. If it's 2, it's about 42% rate of return for the year based on this. Assuming you learn the strategy inside out, understand all the management and so forth, that's about what this thing does. And I can tell you right now that each day I spend about 4 seconds every day looking at the chart. That's it. And I'm done. And I did this today right before coming on. I placed my Iron Condor trade today right before coming on, got filled on my position. I'm in, right? And I don't have anything to worry about any longer right now for the next 40 some odd days. What is it? I don't remember the number exactly. Let's see. 41 days. I've got 41 days in there that I am until this expires. So I've got a ton of time behind me here, right? On Robinhood, implied to IW. Okay. Yeah, AV guy, you can take a look at the IWM, IWN. They're both references to the Russell 2000, right? So what are my strikes? Here are my strikes. And what I would do, now prices have changed, right? We've got this, it's at 45. I've got it back at 50, right? You place the order, confirm that you're accurate in there, and put that trade out, right? And you only want that trade when you place an option trade. You only want it to be out there for the day. If you're not filled today, I want it to be gone. So we would click yes. And someone's saying, but Rob, this isn't an Iron Condor. We leg in. We leg in, meaning we do one side first, the other side next. So the simple way to do it, find the 50-cent premium. Well, here, great. I'm glad this happened. We've got 40. We've got 60. Which one do you do? Don't do the 40. Do the 60. Right? That's the one that I want. This is the, oh, my bad. I'm still on single. But if you have it was a good example, but if you have a 40 and a 60, take the 40. Do not go to, the 60. Don't go down to the lower delta. You have plenty of protection there. You don't need to drop down to 5% chance of being wrong versus 6. I need the 50 cents for this to work. So we find the 2500, 2510, right? We're going to go to where it says sell, which is our bid column. We're going to left click on it, and it loads it down at the bottom. It's got a 50-cent credit at the mid price. We're only going to put one contract each in just to make it easy to understand. All right, here's our 2 positions. We're selling to open the one of the RUT, June 18, 2021, the $2,500 call. And we're buying to open one RUT, the 18th of June, 2021, 2510 call. So buying the higher one, we're selling the lower one. That's our max risk in the trade. That's the most we can get in trouble is the difference between those 2 strike prices. right? We click yes, right? And that trade is out there. So let me go see. So here are our 4 positions, right? So I'm going to write the strikes down. We got 1900, 1910, and 2500, 2510, right? So if we come back and look at a chart, what is going on? Okay, so for some reason, I'm getting bad data in here. Let me get rid of this. Shows the RUT traded at 0 today, which is not possible. The RUT traded at 0, we would all be in a whole heap of trouble. All right, so you can see I've got some lines drawn on here, right? 1870, 1880, right? And I have 2500, 2510, right? So what I'm going to do is I'm going to delete. Actually, I'm not going to delete them. I'm going to change these 2 here. Let me get rid of this. And I'll zoom in on this in a moment. Let me just clean that line up. All right. So we come down here, and we're going to change these over to 1900 and 1910. So I'll change this to 1900. And I'll change this one to 1910. Okay. So right now, I have to scrunch it down, so it's going to be a little bit harder to see the numbers, but I want you to see the levels, right? And here's what I'm doing. Right now, if we look, roughly, we're about $258 away from our lower strike price there, the one we sold, on the calls. On the puts, we're at $325, right? So what's going on there? The market maker, and I may be off a little bit, but we're close. But the market maker is putting more emphasis, giving more room on the bottom on the put side than they are on the call side. So there is not a full or fair balance between calls and puts. They are off balancing between the two. All right. So, but you have to understand that that's the room, that's the protection model that you have. If you close anywhere within this range, which is about 560 odd points, if you close anywhere inside of that range, the trade expires worthless and you keep the premium, which works out. If you got 50 cents on each side, it works out to about 11% that you take in for the next 41 days. Now, I'm only showing one contract. To do this, you need $950 to do one contract, right? I'm only showing you one. What if you're doing this with 20? That's $1,000. It's $1,000 at 100. If you did 10 contracts, it'd be $1,000. If you did 20 contracts, it's $2,000. Right? I'm not talking about paying the car anymore. We're talking about paying the rent. Right? The 30 contracts, you're pulling $3,000. That's the mortgage. See where I'm going with this, guys? Trade with purpose. What are you trying to accomplish with your trading? Don't tell me make more money. It's not the money. You really don't want the money you want the money. Of course you want the money. It's not the money, it's what the money will do, right? What do you want the money for? I want to retire. Great. I want a better retirement. Awesome. I want to have money to buy a new car. There you go, right? It's what the money does, not the money itself. There you go, Shadow. Here to learn. Let's see. So this is a way to buy an iron condo when your platform does not allow more than buying 2 legs. Yes, absolutely. For the drover. Yep, absolutely. You do them as individuals. So you're doing 2 credit spreads separately is what it comes down to. Afternoon, Scooby-Doo. Don't have iron condors have zero effect. Don't iron condors have zero effect on buying power? Well, no. Okay, so I don't know if it affects buying power. I got to say that it would, because you still need to be able to manage one leg of this at a minimum from the broker. And what I mean by that is there's a difference of $10 between the two strike prices, the one that you bought, the one that you sold. Your risk is that $10. You've got to have the cash available to cover that. So it does, but it doesn't have to be. If you were all cash, then it will have effect on buying power. If you have equity in your position, in your portfolio, meaning I own Microsoft or some other stock, then that stock could be used as the hold instead of the buying power for it. But what happens is by just doing one credit spread, you at $10 is what you have to have on hold. By doing the Iron Condor, it's the same $10 or the same $1,000 in this case, because both sides can expire at the same time on the same day against you. Only one side of this can go against you at the end of the day, right, on expiration. So realistically, they should only be holding on one side, not on two, as far as the margin requirements go for it. Webcoin said, I heard of a case of an option spread where on the day of expiration after the regular close, the stock moved big. The holder was assigned on the right, was not aware, so did not close the buy side and lost big. Well, this is an index, so they settle. It's done. It's cash settled index. They settled. It's done. Okay, you're in, you're out. It's done. They're not assigning you the position. Right. Your goal here is to exit out of this position, out of the trade. The way we are not talking exits right now. We're only talking the entries. Okay. We'll get to the exits. So on a credit spread, when this expires, it has a different type of expiration. It expires the Thursday before the expiration. Friday is the last time you could trade it, but it actually expires 9:30 in the morning on expiration Friday. All right. So you've got some different rules in there for the option itself. But if you are trading a stock that has a monthly expiration, not a weekly, a monthly, and you know that easily when you look at TradeStation, right? Well, actually, let's just change this over, make it real simple. Ford, they don't have a whole lot of strike prices in there. See the weekly, monthly? Monthly expiration is the Saturday following the third Friday of the month at 11:59 a.m. Central Time. That's when it exercises. That is where stuff could happen. Weekly options must be exercised on Friday night. There's a whole different set of rules, right? I have had in-depth conversations with people at the Options Industry Council who regulate this on that, and that's their ruling of how it goes. 40 Drover, you are good, no worries. AJ said, if you go further up or down on the strike prices, does that give you more protection? It does, AJ. If you go further out of the money and get a 5 delta and a 4 delta and a 2 delta, it's more protection, but you're not getting enough premium to make it worth your risk. If you're taking in 10 cents and you're putting $990 at risk with the 2 trades that could go against you every year, it isn't worth it. It's not worth doing the trade at all then. Okay, Scooby, just go back and check it out. Watch the recording of it. You'll get it. Brad said, with data around $3 per day, how long do you generally need to have this trade on before you take profits? So my exit, and that was with, who asked that? That was Brad. So Brad, my exit on this for my out of, it didn't go against me, is I put an order in immediately. Once I'm filled, I put an order in immediately to close the entire position at 5 cents. Close the whole thing out at a nickel, right? That's going to go and run its course into the last week or two before expiration, depending on how much movement, how much implied volatility is in the market. All of that will make some difference in there. But I put mine out at a nickel to get out of the trade. That's the management. Zuriel said, is it safe to say that at one point I will, and plus say $80 from the $100, then I can decide to close it? Yes, Zuriel, you can close it anytime you choose. Absolutely. Yes. Voodoo, is the Iron Condor used when you don't expect a major move, either upside or downside, but expect a range bound? That's an ideal place, and that's why where picking individual stocks becomes harder sometimes than going after the index. Folks, I have an inner circle group that I train, right? So it's my highest level coaching program that I have. And as well as my mastermind group, which is another high-level program that we teach. And both of them have been trained on this strategy. It is an amazing technique. But if you have a market that's screaming up or down, you're going to want to back up and not do this on that position, at that time period. Because remember, there's going to be a time that 1 or 2 times a year they will go against you. That's what causes to go against you. Because if we go back to this chart and look, I got a long way to go for this puppy to go against me. I mean, a long way to go, right? For this to go against me. I've got a lot of protection scheme inside of that. Okay. Let's see. Hampshire. Close one iron condor before entering another. So at 41 days, your question just moved. 9 per year. No. Okay. Good catch, but no. 2 weeks left into this iron condor is when you, ideally you want to do these when they're 60 days out. That's an ideal on your first one. I don't have a 60 right now. I have 70 days, so I don't want to go that far. So you do your first one when you are 60 days out. When you get 30 days into that second one, into that first one going away, you do another one 2 months out. All right. Hope that makes sense. All right, Voodoo. And do you let the options that run to expiration rather than leave early? Yeah, if I get out a nick of Voodoo, I'm out. For sure. Let's see. Do iron condors have higher cost trade per leg, 4 legs in, 4 legs out? If you're talking about commission, yes. And this is where a company like Tastyworks becomes amazing. Right? I have an account with those guys as well because they limit how much you can actually spend. You can do 50 contracts on this and it costs you like $15 or something because they limit the cost to spend on I think you got to go and check it. I think it's $5 on just a directional, meaning buying a call or a put, or a single leg, and on a married position like an iron condor, 2 credit spreads. On the credit spread, I think it's $7. I think $7 or $8. Yep, Alan, we'll talk about the managed leg. So what we talked about 1/2 already. Put an order in as soon as you get in the trade that if it goes in your direction, nothing happens. You just go boo, and you're just hanging out. It gets to 5 cents. Get me out of that leg of the trade. I'm done. So we talked about that half already. We got one more leg to talk about. So Brad said, for more experienced traders, would you not suggest a little higher premium, or is this steadfast rule with the RUT? Oh no, Brad, this is steadfast rule with the RUT. There's a reason it only goes against you once or twice. It's because of how you're moving in the formation of standard deviations. That's exactly what it is. This trade has been tested and tested and tested for decades to come up with a system that works the way that it does. So for me, I don't change my numbers. 4D Drover, it depends. Some brokers do charge for the close of the second leg. TradeStation charges on all legs. It just depends who the broker is, right? Okay. Now, the question came up, and Alan put it in twice, on the management of the legs. So 5 cents is where you're buying your option back. If it goes nowhere, right, just kind of goes sideways, dies, that's where you're going. You need to go ahead then, Alan, and set an alarm that when the stock, for some reason the RUT falls to 1910, your leg that you sold, right? We sold the 1910, right? The one that's closest to the stock price. On both sides, it's one that's closest to the stock price, right? And the way that the phraseology that is used here, guys, when it comes to iron condors is this. Watch, let me get this out and bring it back in. The green lines that I've got drawn are to the inside, right? So the expression is guts are on the inside, wings are on the outside. Think of the bird, right? The wings are on the outside, guts on the inside. So the wings, the outside, okay, that is your protection mode. The guts, the most important piece, are on the inside, right? That's the legs that you sold, all right? So you would go ahead then and say, all right, if it gets down to 1910, close that position out. So if it moved down, I would close out the put side. I would not close out the calls. Although the calls are probably going to take you out at 5 cents if it does force you out at the, if it does push you down to that 1910 level. All right, Alan, does that make sense? Yeah, Jeff, I think I answered your question along the way with that. So hopefully I did. Is this trade specific for the RUT? So 4D Drover, you can use this for any position, right? An iron condor. I like it with the RUT because there's less management to it. If I were trading this on an equity, I would trade it at a weekly position at most. I would not trade this on a longer term position. Earnings affect an individual stock. They have some effect on the RUT, but I think that the highest from the, and I may be off, I know more on the Qs than I do on the RUT, but I don't think anybody in the RUT is more than 1%. I don't think anybody has that. Where you go to the Qs, and Apple is freaking crazy. Google, sneaky as they are with GOOG and GOOGL, is higher than that, right? Or just about as high. So that one position has earnings, it smacks the index around. You have 3 or 4 companies announce earnings. You've got Amazon, Facebook, Apple. They all announce within days, some of them on the same day, right? Depending on the quarter. So I can offset that by trading the index that doesn't have a lot of effect from the earnings. It's not hurt as hard. Good, 40 Dover, you got it. Possibly show the strategy with a smaller position, possibly another day, but it's a whole new strategy at that point. So we're 45 minutes in here already, and we're still on the one strategy. So a little hard to add, but we definitely can do it another day. Muhammad, I appreciate you dropping that in there, guys. Listen, guys, there are so many ways that you could trade the market. So much money is out there as a potential to be made. The question just comes down to what strategy do you use, right? When I teach my students how to trade, it's not per se, I teach you to trade an iron condor, or I teach you to trade a covered call, or I teach you to trade just buying calls and puts. What I teach is how do you take a stock like an Amazon, right? Or how do you take a stock like Microsoft? Or another stock, whatever the stock is, and how do you actually make money with that stock? And it all comes down to being able to read the chart and to hand you the trade. Right now, I'm sure that if you look at, and I can tell by the questions where some traders are, right? When they start talking about managing the legs, and I know that trader has more experience. I'm not saying they're more profitable, has more experience than someone that may ask a different question, where I could just tell that it was more of a beginner's question or more basic question, which isn't bad. That's exactly where I started. I wasn't born and somebody did this mind meld with Dr. Spock. It's like, and I knew what the market was all of a sudden, right? I did the same thing you guys did. I put my heart and soul into learning how to do this way back in 1997, right? Killed myself on the position, on the market to learn it, right? Because I was not going to let this beat me. I did whatever I had to, beg, borrow, steal to get money for it, for the training that I took, for the account that I opened up, every bit of it. And still lost over 8 grand on my first trade that I did, right? Why? Because I got cocky. I figured I had it down because I did one practice trade and it went right. And I went all in and had my head handed to me on that very first trade. I still have nightmares over that company. This is Street Smarts options trading. 40 Drover. Here's the thing. Traders, there was a place in Brooklyn where I used to keep my boat. And it's a marina. And you'd be walking down the dock and you'd see a guy with a bucket of fish. Like, wow, man, great job. Good catch. Yeah, thanks. I appreciate it. Where'd you get him? Out in the ocean. Yeah, okay. I kind of figured that, but where? Oh, no, I can't tell you that. That's secret stuff. No. You got to learn your own spots, right? And you have some traders are the same way. They're not going to teach you what they do. They're going to just talk, in bigger circles what they do. Here I'm giving you everything, right? I told you the position to trade. I told you what the strike price is, how to pick the mid, how to manage both legs. Guys, I'm all about full transparency with everything that I do, right? But I believe that if you can learn how to trade, You will continue to support companies like Benzinga with some of the new services that they have. You'll continue to work with your brokers, which would be good for the brokers. You'll continue to find educators like me and learn more advanced strategies from what we do in there. But I need you to learn the basics first, meaning I need you to get profitable at trading. And I know some of you are trying really hard. Some of you are there. But those of you that are trading, if I said to you, I'm going to send you 3 trades a week, just 3, maybe 2, but let's say I send you 3 a week. And those trades have high probability of being right. How many of you would say, no, Rob, thank you very much. No, I'll do it on my own. No. Come on. Of course not, right? No, that's not what's going to happen, right? Of course you'll take them, right? Well, guys, I do that. I send trades out every single week. I've got already, I know, pretty sure who, I'm waiting for the close, pretty sure who I'm going to send it out for tonight. But I send these out a couple of times a week. We've had ones that have been crushing it lately, absolutely annihilating it. I'm very impressed with some of the emails I'm getting back from students that are trading these and what they're doing with them. So here's the thing. And if you guys could drop the link in, Jen, I know you got the link, but if you go to tradewithrob.com and then /go, if you guys could drop the link in there, I'd appreciate it. All right, tradewithrob.com /go. And it's free, guys. There's no cost whatsoever. Sign me up, right? What are you doing? First name, last name, email. SMS optional if you want to send to your text. Agree, click register, you're done. You'll get an email that tells you, hey, this is just what happened. You registered, great. And then you'll, a little pop-up, and then you will get an email every time that we send this out. And the email comes at night. So with the exception of the one on Friday, usually. Friday, you'll probably get it over the weekend. But it comes at night, and then you'll get a trade setup for the next day. And the trade setup, the way the setup works, I don't know if I still have it on this one. Let me see. Okay, so there we go. Right, here was American Express. Right, I don't remember the day we took the trade, but it was somewhere in here. You take the trade. Here's your stop. We never got down there. Here's target 1. We're at a half of the trade already at this point. So you get in, we'll call it 152. You get out at 156 and a quarter. So you got about a $4 move in there, let's call it, $3.50 on the option. Depending on how many contracts, that's half the trade you're out of. The other half is up here. This is what I do with them, guys and gals, right? This is what I do. So it's a free service. You're welcome to register for it if you'd like. I see it scrolling across up there. I know a bunch of you are in it already. Muhammad, I appreciate you dropping it in there. Thank you. Could I draw a quick fib on the RUT? Yeah, let's do that. And then I want to look at a couple of candidates before we wrap it up. $ RUT, R-U-T. Okay. So we're going, let me do it this way. Let me take it back to here. All right. We've got to go way back to be able to draw this. And we're drawing this out right now here. So we're drawing, I'll give you dates. The start of the Fibonacci was October 30th, and the end of the Fibonacci was December 28th. Right? That's where we've got them drawn. Yep, so let's do that. Let me jump in, guys. All right, let me go over and pull up a different template here. Let's look at NEO. NEO is no. Okay. I mean, if you're playing a put on it, maybe, but there's nothing about this that's exciting me at all. We are in a bearish bias with our moving averages. The 8 is the lowest moving average, the pink. The green is in the middle, 21. The brown is on top, 55. We're bear. There's nothing about this that says to buy it at all to me. Okay. So now that doesn't mean you can't buy a put on it, but you've got all these bottoms in here that you've got to watch out for. Actually, let's do this. Let's pull this back. That fib needs to be redrawn in there. Yep. So you've got this bottom here at about 34.5, and at about 32, you've got a support level. So caution with NEO. Hey, guys, here's a couple of them out of my playbook. Adobe. I know you guys are looking for some candidates. right? Adobe is a candidate we have crushed it on the last couple of weeks. We've done phenomenal with it. They are now in this bearish mode. The 8 moving average just crossed the 21. Pink just crossed the green line right in here. We just got below the 55 moving average. Actually, hold on. I don't have this streaming on, so let me put this back. I shut off because the RUT doesn't register till end of day on this service. Okay, so we pushed back up to the moving averages and we failed. If we break the 485.5 today, or we break it on Monday, it doesn't matter. Here's what I want to see happen. If you can get this to take place, I'm just going to have to change color on my pen. If you can get this to happen, come on down, retest, fail. That failure right there is the entry. Your first target is that 473. Your second target is 461. Down there. Love the potential for Adobe. But you really, in an ideal world, it closes below the 485.5 level for Adobe, right? For Alibaba, Voodoo, I appreciate that. Said my 12 p.m. Monday show was pretty awesome. You can check that out on my website. Why is Baba not coming up? Let's try it again. Okay. All right. Alibaba's the same thing, guys. Day trade only. You've got earnings coming up on Alibaba. So be cautious with Alibaba. The earnings are here. So we broke down. Moving averages are in the right order. I like it, right? I would give this a B as far as the trade setup, B plus, right? C would be worst. You know, A would be the best. A would be the moving average was sitting right on top of the fib line. That would be an A. Come back and retest at 227.5 and fail on Monday. You're looking at 219 as your target. Plenty of opportunity for movement there. Let's see. Facebook. All right. Bigger picture first. Nice strong move to the upside. We'll zoom it in. Facebook had this nice gap up after their earnings. They've pulled back. Right, took a good bounce yesterday, gapped up today, and started to pull back. I need a retest at that 317.25 level, or at least get close to it and bounce, and that gives us an A entry. Why? Do I have a concise entry? Well, if I get near that 317.35 and bounce, yes, because my moving average and my fib line give us a confluence. That confluence is an area of strength. The moving average traders are watching it. The fib traders are watching it. I watch both. I'm watching both indicator sets. We get a bounce off there. It's an area of strength. Do I have a clear path to resistance? Yes, there's nothing in here like a moving average or a Bollinger Band or any other indicator that's in my way. 100-point levels, there's none of that. Recent swing highs, nothing is in my way. Nothing's in my way. So this is an A setup if we get the bounce off the 317.35. All right, and let's look at one more. Let's look at the master of disaster, Mastercard. All right, Mastercard. Moving averages crossed, 8 below the 21. If I can get a push back up to the 378 level and a fail, and that would be an A setup, I'm looking for the move down at 367. Your stop is going to be just on the other side of the moving averages here. So maybe 380 or so, 81, somewhere around there. Well, why would you need a big account? I mean, it depends, I guess, what you mean by big account, right? Facebook. Here, guys, listen. All right, here, I'm going to share something with you that only gets shared with my highest level students. All right, but I'll share it with you today. If you trade, now Mondays, these are all the stocks I'm talking to you about right here. This is the cost. I could trade Apple for $4. I could trade Adobe for $14. I could trade Baba on a Monday for $8.30. Right? And these are prices that came back from March 8th. So we're not that far off. They're fairly accurate. They'll be a little bit higher, a little lower, depending on how close to the strike we are. I'm not having you trade Booking and Amazon, right? I don't have those guys in there. But Adobe at $14. And if I trade Adobe on Friday, it's about $5, $5.25. All right. So I understand, that they may be higher priced, but the reason to trade options is I would rather trade an option on a higher price stock than try to trade the lower price positions that don't have the movement to them. For me, any of my positions, with the exception of Apple, needs to move at least $4 a day. It has to have an average true range of at least $4. Good. I'm glad you guys are enjoying it. Where are we? Spencer, it looks like we are there. Guys, go check out American Airlines and CCL as well for covered call trades. They are fantastic setups.
Guys, if you haven't, for whatever reason, I don't know why you wouldn't, but smash that like button for Robert. Dropping knowledge on a Friday. We appreciate it. Iron Condors.
There you go. Loving it.
The good stuff.
Cool.
All right, Rob.
Have a great weekend, man.
Thanks a lot. Have a great weekend. Everyone, stay tuned. Zinger Stock Trivia coming up next. This video will redirect straight to that. You don't have to do anything. It's our only interactive game show here at Benzinga. So that's up right now. The guys tell me that they're ready. I'm ending this stream. I'll see you over on Zinger Stock Trivia.